Hello everyone, this is Avijit Singh recording our Chartsarefun weekly session. This is for the week of December 2nd, recording this on the Sunday evening, the December 8th. Market continues to rise. There's been some pundits in Wall Street talking about perhaps the US market is in a bit of a bubble. Very well-known columnist in the Financial Times talked about the economy. And if you look at the US GDP, it's about maybe 28%, about 30% of the world. But if you look at the total market capitalization of the US to the rest of the world market cap, it's almost at 70%. So there's a huge dichotomy in terms of the market cap to the fundamental GDP. He kind of touched on that. Ruchir Sharma is his name. There was also a Barron's article over the weekend talking about perhaps there are better areas to invest now for investors. US being very stretched. If we look at valuation, S&P's trailing is perhaps over 25, 26, forward maybe around 23, 23 and a half. And if you look at the emerging markets, they're anywhere from the 15 to the 16 level. And some countries like China, even closer towards the 10 and 12. India is slightly higher, maybe towards the high teens to the 2021. There's been discussions about diversifying outside of the US, but that said, if foreign investors, or for that matter, US domestic investors, are chasing stocks like no tomorrow. We've seen S&P take out 6,000 finally and head closer to 6,100 last week. We have seen the small caps trying to get a bid. They still have taken out 2021 highs, but not yet met the target that I had for IWM, which is a small cap Russell 2000 ETF, closer towards the 258. So there's upside there. The target on S&P I have previously painted at 62.19. So it's getting closer towards the 6100. So there's another 120 points or so, 120, 130 points for the S&P to climb to get to the target. The target is based on really the daily chart of S&P towards the late October, November. Broke out from a cup and handle, and it was from 5,600, 5,650 or so was the top of the cup. The bottom of the cup was 51.19. Measured that, it comes to closer to 62.19. So 6,219 is S&P's target. We'll see if it gets there soon. Crypto took out, Bitcoin took out the 100,000 and then closed slightly below it. It had a lot of volatility after it took out and went to 104. Very sharply pulled back to 100 and towards the 91, 92,000 from very rapid profit taking, and right back up towards 98, 99 is kind of hovering right around 100 over the weekend. We'll see if it can. It also has a target higher from here. I had talked about Bitcoin's target closer to 131, 132,000. So we'll see if the momentum continues in the market and it can meet those targets in the next few weeks. With that, let me share my screen and talk about some of the things we just discussed. So this is our Chartsarefun Substack site. You can look at archive and see our daily blogs. We publish blogs in the mornings usually. So if you subscribe to your email, you'll get a copy as soon as it comes out. Our YouTube site is Chartsarefun as well. It's at youtube.com/@Chartsarefun. Appreciate you subscribing to our videos and liking the videos. If you could hit the like button, we appreciate that. This is the article I talked about that came out from Ruchir Sharma. He is Chief Investment Officer and founder of Breakout Capital. He was at Morgan Stanley for several years. He's put out this article about, and he's recently written a book about this as well, The Mother of All Bubbles. So he's really talked about the book that he had published towards the beginning of this year, was about, is this capitalism really make it in the world? I mean, is capitalism for real, and does it really succeed? But that said, in this article, he talked about US attracting a lot of foreign capital, the dollar regaining strength, going to higher highs, and talked about valuation concerns, talked about perhaps this was a bit too overhyped in terms of US prospects relative to the world, and something for investors to be careful about. Following his trail, Barron's, and this was earlier in the week, last week, May 2nd, December 2nd is when Ruchir put out his article on Financial Times, and then that's CFT. And then Barron's put out an article saying that, as the US stock market booms, maybe the opportunities are in 12 other stocks. And if you look down that list, we had mentioned it in our blog, but if you scroll down, you look down that list, they're talking about companies in China like BYD, the famous electric car maker. They talked about a few companies basically spread around the world was in the list. So you can see that they talked about Vector Food Specialties in India. They talked about Yangtze Power manufacturer in China, Great Wall Motor, also big into electric cars. They talked about BYD, PDD, which is the huge behemoth in the Chinese e-commerce retail. They compete with the Alibaba. They've been extremely successful with their Temu retail offering, e-commerce retail offering that also sells in the US. So there are these 12 different stocks around the world that they had picked. If you start looking at, this was in my weekend blog, if you look at the SNPY's ETF spider, SPY, you can see a wedge forming. A wedge, as in if you take the tops and you take the bottoms, it's kind of converging towards a point where once it reaches an apex, it could perhaps come down. So usually this kind of a rising wedge is a bearish pattern because the width of the movement slowly narrows to a point where it reaches its apex and then it comes right back down. Well, right now it's at the top of that trend line. We can see that it's 607, 608. If the measure at 6219, 6219 happens, this could be closer towards 619, 620 on the SPY. Something for us to see. Will it exceed the top trend line and continue higher? But right now, this rising wedge does not look so bullish. And if you look at the MSCI World Index, in this counting US and everything else, turns out this, if you look at the top 6 or 7 holdings, they're all of the Magnificent Seven in the top holdings, though there are thousands of other companies around the world in this index as well. That's similarly reflecting a bearish rising wedge to the SPY. So here again, we take a trend line to the tops and a trend line to the bottoms. This is a daily chart, a 1-year daily chart. We can see that it's also testing the top of the trend line here, 123. The measured target on this, so 116.8, 105.5 to 117.3. You're talking about closer towards 11.48 plus 13, 11.61 or so at to 117. You're talking about to 118, 128 7 or so, be around 123. So 5 more points to go in terms of the cup and handle here on this chart. So that's something for us to see, but it is also a rising wedge, a bearish pattern. If you take the US out and do the MSCI World Index ex-US, this was a falling ascent, like a falling descending channel. So if you look at the peaks and look at the bottoms, temporarily after the election, it tried to take that out, came right back down on the channel, was declining all along till very recently in the last week or so, it has broken out of that and now been climbing. So this, in some ways, is getting closer towards the 55.9, 56 kind of resistance. It tested 55.63, closed back closer towards the 55. We got to see what this index does, this ETF does. Maybe this could go retest those highs near 57.96, but we know that it's out of its bearish pullback, call it a consolidation, and just has broken out of the descending channel. Now, the emerging market ETF, the MSCI Emerging Market ETF EEM, this we look at the similar kind of declining channel in here, it has not yet broken out of the declining channel. It did break out briefly after the election and then closed right below that and stayed in that channel, briefly had gone below it. But more or less, if you're taking the line to the peaks and the line to the lower lows, that is the descending channel that I'm talking about. It's right at the top trend line of the channel. So we'll see if EEM gets a bid. A lot of that is determined by China. FXAI had a pullback, is now beginning to get a bid. So FXAI, which is the China's large cap ETF, and the Shanghai index, as well as the Hang Seng, has many of the large Chinese stocks listed in Hong Kong. So if those get a bid and the market starts moving higher, you could see EM to break above this trend line, something for us to watch this week. FXI is the large cap China ETF. This one had a bullish wedge, like we saw the climbing wedge as a bearish pattern. This is a declining wedge, which is a bullish pattern. So here it pulled back from a parabolic climb from 25 to 37 early October. Since then, it's kind of pulled back on a declining wedge. It kind of came to the apex and then broke higher. Right now, it's at 30.77, a good resistance point for it, that it seems to be headed towards the 33.6. From there, perhaps it could have a pullback, but seems like that's where it's headed. It nicely pulled back after that parabolic climb to the previous high, 29.44 from May. That is now acting as very solid support, which was resistance before. So it gapped up and broke above that, as we saw in late September into October. Pullback, and guess where it rebounded from? 29.36, very close to the 29.44 from May. So this resistance has now become strong support. Very bullish pattern overall. Strong parabolic move, pull back to test that exact support. China could be another place to invest right now to diversify out of US, and something for investors to look at, because definitely there's upside on FXI, at least to the 33.6 level for investors to look at. India, on the other hand, also like the emerging markets like China and others, had a kind of a descending channel after that late September peak. It fell along the descending channel and then broke out towards mid-November. And now it's headed towards a key, call it resistance level at 56.5. It tested 55.85. So some upside left in India in the next few days for it to go test it. It'll be a key resistance. I have a feeling it's going to initially test it and likely pull back, but we'll see. Right now, it is broken out of that descending channel, and that horizontal line I've drawn is the resistance line moving towards 56.5. For us to see what happens to India next week. And one country I'm going to talk about is something that's been in the news, South Korea. So their president, who's been around from May 2022 for a little over 2 years, the most unpopular president, his popularity rating is less than 20% right now. He suddenly declared martial law. He was very unstable about his opposition. The opposition really are making a big claim or making a big push for him to resign. He's not been able to really get the Korean economy anyway in the direction of what his commitments were. He's losing majority status in the parliament as well. So there was this kind of a very sudden reaction on his part, a knee-jerk reaction calling martial law, which is very strange in South Korea. That typically can be thought of, and maybe there's a North Korean crisis, their neighbor country there, any kind of economic or political, or for that matter, military risks. But there was not anything as such other than his popularity going and waning down significantly. Called the martial law. In less than 6 hours, the opposition, so military took over the parliament and tried to prevent the opposition to get in. They did manage to get in around past midnight, voted down the martial law. So he had no choice but to cancel the martial law. That said, there was a no confidence vote against him this weekend. That failed. His ruling party members stood by him, did not vote for him, no confidence, and the opposition was not able to get enough votes to get those. So they basically abstained from voting his ruling party ministers. So this is a beautiful descending triangle pattern in the South Korea ETF, EWY. I'll show you why I feel it's potentially looking like a good buying opportunity on. Remember, as Warren Buffett says, you buy when there's a lot of pain and fear out there, right? You do the contrarian move. This seems to be a contrarian move in my perspective. I'll show you technically why. Fundamentally, yes, it will take some while for the investors to get confidence back in the Korean ministry, and especially until the president is vetoed out. But till the technical perspective, this descending triangle pattern from 59.97 to 67.24, that's roughly a measured move of 7.27. 7.27 subtracted from 59.97 measures to 52.7. It came very close, in fact, dipped slightly below it, met 52.67 versus 52.7 target. From there, sharply rebounded the same day. This is the day of Tuesday night was when the martial law got declared. This was during the afternoon time in US markets. This is the ETF that trades in the US markets. We're looking at its movement. It snapped back up a lot after testing that low near 52.7s and closed out near the 56 level. So that was a bullish reversal. Didn't quite close positive for the day, but came close towards the highs of the day, very close to from where it dropped, it closed the previous day. And this is where you get a strong climb because there's smart money coming into this ETF. That's what typically does to an AD. AD climbed significantly higher with that kind of volume. So AD is accumulation distribution, indicating that smart money snapped up Korea shares. And as it printed lower lows in price, you can see a higher low in RSI. That's a bullish sign. That's a positive divergence. And if I look at the weekly chart of EWI, this is a beautiful, not beautiful in the sense of long-term potential is a bit bearish, could be a head and shoulder top, but at least in the near term, it's got very, very good support in the 53 region. So that if you do a neckline through it, the left shoulder is from 53 to 65, 66, pull back to 53, got a head movement to 69, pull back to 52.67. That could potentially now be the neckline test. And now the way I'm looking at it, we'll see if this is what pans out, but I'm anticipating a potential right shoulder move on the EWI. So from the 54 level, just below 55 where it closed, we might start getting a rebound, a counter trend move back to the 66 level. So this right shoulder forming from 55 to 66 may be a decent 20% upside for investors to look at. Now, there was the vote of no confidence over the weekend. As I said, the president won it. His ruling party ministers abstained from voting. So market now wants the president to be out. So market may not like that, the fact that the no confidence was lost. So there might be some more downside. If you look at downside, a potential move where this could be very attractive to buy into is this gap from October 2022 near 51.96, right below 52 in this weekly candle. You can see that there's a little gap between the candle here with the candle to the left of it. That's the gap near 51.96. So a considered opportunity movement would be putting a kind of a limit order at 51.9697 and snap up some shares of the Korea ETF from 52. It's a very good chance it'll do that. But if you do want to be careful with your risk management, you could perhaps put a stop loss below that, maybe near the 51 or so, because if that breaks, there's a good chance it may retest its 2022 lows near 45. That said, the P by E on this is extremely attractive. You're looking at P by E's, the UWI, if you look at its P by E is closer towards the 14, 15 level. That's what it shows on the fact sheet, but it's maybe even lower, the price having come down this much. But anyway, I mean, attractively less than half the price over earnings from the US perspective. Korea, as we know, is a strong economy, huge number of conglomerates, industrial conglomerates, whether it's Samsung, Hyundai, Kia, all big Korean companies have huge consumer market in US. And though there are tariff concerns and so on, Korea is less of a tariff target as China is. They may negotiate. The President Yoon from Korea was actually practicing his golf to come and meet President Trump at Mar-a-Lago and maybe play golf with him to kind of buddy up a bit with the re-elected U.S. President Trump. But that said, possibly this is a knee-jerk. Investors becoming very worried about the uncertainty in the president's lack of confidence and losing popularity. But remember the time when people sell, you buy. I think it's looking very attractive. So in summary, we'd say that market is at the top trend line of S&P, in terms of a bearish rising wedge. Sooner or later, this will pull back. We'll be prepared for that. The near-term target is still towards the 6,200. So once it crosses 6,200, I would be extremely cautious, expecting S&P to go much more upside from there. Wouldn't be surprised to see a first quarter pullback, maybe even back towards the 5,600 or even towards the 4,800 is a possibility on the S&P. The ACWI mimics S&P, similar kind of rising bearish wedge at the top end of the trend line. We'll see what it does next week. The opportunities lie more outside the US at this point, as the Barron's article said, and we agree that's what the charts are telling us. From a descending channel, it's broken higher. A channel that's not yet broken higher but seems poised to break higher is EEM. So EEM could be a way to play, a safer way to play the diversified emerging market ETF. We see that it's right at the top end of its descending channel. Very good chance it breaks higher next week. China has just broken out of his bullish declining wedge, is now moved from the FXI from ETF from 30.7, likely headed towards 33.6. So that's a $3 move, close to a 10% move right there. India has already broken out of its descending channel. It's closer towards its near-term resistance at 56.5. This is the MSCI India ETF INDA. I would not be chasing India for now and wait for a pullback instead. I feel that this is closer towards its resistance level and not as much of an opportunity for upside on it. Korea, as I would end with, is likely looking as the best opportunity. Just for the downside, if you luckily get that gap close near 52, below 52 at 51.96, would be an excellent buying opportunity and play a nice upside towards a move to 65, 66. With that, good luck investing. We'll talk to you next week. Thank you.